Okay guys, today we're going to take a look at Bitcoin. We're going to take a look at a few different metrics. We're going to have a look at the 𝗖𝗢𝗠𝗠𝗘𝗥𝗦 dashboard, the artificial intelligence, see what that is indicating to us. We'll have a look at the Bitcoin dominance, we'll have a look at the stock to flow, and of course we'll have a look at the charts here, both on the hourly, the daily, and of course the weekly, to give us an idea of where the long-term picture and the short-term picture. Guys, as we get into it, if you find it useful and informative, hit that like button. We both really do appreciate that. If you're new to the channel and you want to stay up to date, make sure you hit subscribe, tap on the bell, hit all notifications, and you won't miss another update. Right, guys, let's get on into what's going on with Bitcoin. So we're going to start off with this weekly chart for Bitcoin. So on here, we can obviously see everything kick-starting off from basically August of 2017. This is obviously Binance, so when Binance was recording the history for Bitcoin. Now, we have this yellow line, the horizontal line across the top. This is that previous all-time high area. We'll call it 20K to keep it nice and consistent. This is the level that many people are calling Bitcoin to drop down to. It seems a pretty good rebound area, and I think this is a pretty interesting area for many to call out. Now, this isn't necessarily something that you're going to see anytime soon. It's definitely not something that's going to happen until first of all you push the price up, and I'll get into why that is in a moment. Obviously, we have a few additional things. We have the Fibonacci retracement tool based on the current high and the current low. It shows that the fifth wave to the upside puts us at approximately 182K. Of course, if we were to drop down any lower, let's hypothetically say, you know, all the bears were right and we do drop down to the 20K area, the Fibonacci would then actually indicate that we'll be going up to $211,000. Now, I don't think 20K is realistic. I think actually if we are going to fall back anywhere, there's two areas that we want to be watching out for. There's the $28,000 area. This is the most sensible one. And then there is, of course, going down to about 24K. And again, this puts it just under 200K at the top end on that Fibonacci extension level. So, and there's a couple of reasons why we think that 24K is a more substantial area that you're likely to get a good rebound from. With this being said, though, guys, there's also an opportunity or the possibility that we do not really drop down much further at all. And I'm going to get into why this is. So on this weekly chart, if I just put this back to where it was just over here, it's a bit high actually. Let me just move that back. About there we go. So on this weekly chart, one of the things that's really important that we acknowledge is obviously some of these other metrics that are hidden in the background, right? You don't look at them unless you actually bring up these indicators on the chart. So right now you obviously have your candlesticks and you have all your wicks and you can see what's going on there. You can find supports, you can find trends, you can find resistance. But it's important that we do acknowledge a couple of additional indicators. Now, obviously, I have my favorites. We've got the Bollinger Bands, the EMA, the MACD, the Moving Average. We've got the Relative Strength Index and the Stochastic RSI. So to start with, we're actually going to click on the Stochastic RSI. And this actually shows you the, it's really sensitive to price movement. It's basically like a Relative Strength Index, but more sensitive. And ideally, you want to use this one when you are starting to trade sideways. When you trade sideways, this one picks up on things a little bit more acutely than you would find with a normal relative strength index. With this being said, it shows you that momentum and that sentiment, right? And basically, like the RSI, if you're below 30, you're oversold. And if you're above 70, I think that is 70 on this chart. Yeah, above 80 on this chart and 20. So basically below 20, you're oversold and above 80, you're overbought, right? So right now on this weekly chart, we can see that Bitcoin's right in the floor at a rating of 1.2. So obviously much lower than 20, right? So we know it's oversold, significantly oversold. In fact, it's right down there at 1.2. This is an area where even during the March crash, right, of 2020, this stochastic RSI went down to 8.7. So we were much lower than that, right? So there's nowhere really else for Bitcoin to go on the bigger macro view than up, right? First of all, the price action has to go up in order for this stochastic to push up with it. Okay, so if we are to go down any lower with Bitcoin, the first thing that has to happen is the price has to go up. I think everyone can acknowledge this. They often call these things a dead cat bounce. And ultimately, you go down, you bounce up, you find some resistance, and you shoot back down from there. And of course, depending on the amount of fear in the space, would dictate whether or not you're going to utilize the stochastic RSI space effectively or not. I.e., if you're volumes are decreasing whilst you're pushing the price up, obviously you're going to push that stochastic RSI to the upside, waste the space of the stochastic RSI without actually doing too much price discovery. So ideally, in the bulls world, they would actually want to see volume growth on every day or every week or every hour that passes as we push that relative strength index to the upside. In doing so, actually you're utilizing the space of the stochastic RSI effectively, and you're able to make pretty decent price discovery. Obviously, in this particular case here, the weekly chart, being the fact that we are at 1.2 on the chart here for the stochastic RSI, is indicating that we have to push up. But being the fact that this is a weekly chart, we're going to have to push up for quite a few weeks. This is actually giving up to a pretty good second half of the year. Once we are done with this fourth wave correction and we actually put this to bed, ultimately we're going to see some pretty phenomenal growth with Bitcoin because it has a lot of space to grow on this weekly chart. Now again, even when we flip down into our daily, we show a very similar scenario. We are right in the ground here at a level of 5 on that stochastic RSI, meaning that ultimately this is the same area where we dropped down previously. If we look down here at pretty much 1, when we actually had that initial crash, that selling climax from that Wyckoff distribution. Right, so during that Wyckoff distribution, we pushed right the way down. The stochastic fell all the way down to an area of 1. Then we got the bounce to the upside. Right now, we're right down here at a 4.9, and we're waiting for that bounce to the upside. So ultimately, although we're trading sideways from a candlestick perspective, in the background, this stochastic RSI is saying there isn't much more room to the downside. In fact, we're likely to have a push to the upside before we have the opportunity to push back down. I'm not saying that we're bull or bear at this point in time. All I'm giving you is the facts to say the price has to go up if you want the price to go down later. Likewise, if you want the price to go up and find good price discovery, then you obviously have to have good sentiment, which is not yet there. So the expectations are we're going to probably trade sideways between two very key areas as we bounce the stochastic RSI in lots of different directions, specifically on this daily chart and the hourly chart. But we have to be mindful, and it's very important that we are mindful of the bigger piece. That weekly chart is indicating that we've got a lot of growth to the upside to happen in order to get this stochastic weekly RSI to actually move to the upside of significant note. So if we're going to expect the bear market to come in, we're going to want to have to see, first of all, that stochastic RSI in an overbought situation, which just isn't there yet. So obviously, knowing this and knowing where we are, the expectations are that we will eventually start coming out of this downward trend, this sideways trade, this stagnation, and actually start to push the price of Bitcoin up. This is something that absolutely has to happen because we cannot fall down without first pushing the price up, as we indicated. So obviously, knowing this and knowing where we are on this daily chart, knowing that the stochastic RSI is indicating that bottom has been found and we're going to first have to push the price up, it's important that we acknowledge a few additional things. First of all is that fear that's in the space. We're being told that there is extreme fear, and this is the generalized fear and greed index. I always like to couple this with EVI's dashboard and see what the artificial intelligence is telling us. Unfortunately, Bitcoin has actually slipped down the rating a little bit. It was, as of yesterday, a C1, and it has dropped down to a C2 rating today. This is indicating that we are expecting a bit more of a downward turn for Bitcoin, at least over the weekend. I'm not expecting any major price movements, at least myself. Here we can see the fear and greed index is at C1. This is not necessarily extreme fear, but it's also not greed either. It's probably a reasonable amount of fear. I would say there's definitely fear there, and the artificial intelligence is definitely picking that up as well. We can see the Sharpe ratio is a rating of D, which is the worst rating you can get, so there's definitely risk to rewards if you were investing now. Ultimately, we are closing the gap, though, against that Sharpe ratio and the 50-day average. You can see the red line is the 50-day average here, and we can see that we're closing that gap nicely now. So the expectations are that as the stagnation continues, we're going to close the gap on the 50-day average, and we're starting to see a positive reaction on that Sharpe ratio. We can also see that the moving averages are still a rating of D. The peak end value demand is at B2. The profitability, that return on investment, is still an A1, and liquidity is also a D. So we have to be aware that there are a few issues here with Bitcoin, and the artificial intelligence is not hiding any of this from you. It's basically giving you the data as it sees it. So it's always good to get a good balanced view from the artificial intelligence, coupled with a generalized fear and greed index, and of course understanding all those news outlets and what they're all talking about and their narratives that they're trying to spin. With this being said, and we understand that there's a bit of fear in the space right now for Bitcoin, and the chart is obviously at rock bottom, and we're wanting to push the price up, do not expect anything major to happen over the weekend, but I am expecting something over the next week or so. So what we're going to go is actually take a look at Glassnode, and Glassnode is showing us the stock to flow model. The stock to flow model is a really interesting metric that helps us understand whether we are below or above value. How is it currently being valued? Is it less than the actual value? Is it undervalued or is it overvalued, right? And what we can see here is this gray line that runs through the middle. This gray line here is the value line for Bitcoin, okay, according to the stock to flow ratio. And what we have here is actually a major drop down below. This is definitely a deviation from what we saw in 2017, where a pullback did happen, but it was not as severe as this. In fact, this is now more in line with what happened over here during 2013. I'd say this is pretty much exactly what we're experiencing, this stagnation period from April all the way through till I think we started to get a pickup in September. So that's the idea, guys. You're going to be expecting us to kind of go sideways or get a little bit of motion going, but you won't see anything major probably until the latter part of the year going into Q4. Those are the expectations, and we shouldn't really deviate away from that. Obviously, the stock to flow model does show us a few interesting things. The value line here is showing us that we should be spiking above $100,000. Again, this is in line with what we talk about in terms of the Fibonacci retracement tool and that $182,000 that is indicating. And again, we look at the 17-18 bull run, we can see that we spike well above that value line. Again, we see it again here in 2013. We saw it all the way over here in 2011 as well. So ultimately what you look at in terms of these cycles are these spikes above the value line, and we are not there. And it's also good to kind of have a look at the stock to flow deflection. And here you can obviously see that the value line being 1, and obviously anything below 1 is basically undervalued, and anything over 1 is overvalued, right? And now when you take a look at 2013, you can obviously see that we were massively spiking up over here. We take a look at the 2011 overvalued, right? And then obviously down here in these bear markets, in between these areas, you can see where basically we are undervalued, okay? So it's always good to get a good balanced view and understanding of what all these metrics are telling us above and beyond just what you see within the charts. The charts are very easily, find it very easy to kind of misguide people. And sometimes you actually follow something, a pattern, and you kind of get it stuck in your head that that's what's going on, whilst in the background, all these other indicators and these other factors are telling you a different story. So it's important that you understand these. Now, when we drop down into the hourly view, it's well worth just expanding this up, and we'll take a look at what's going on here. Now, here we have got an interesting level. I've drawn on 2 trend lines along with all of our various different support levels and resistance levels. Now, these 2 trend lines are narrowing as they go down. Obviously, we have the resistance trend line, which is where we're pushing right now. So I am expecting, probably by the time this video goes live, that we'll start to see a bit of red for Bitcoin as we start to bring the price back down. And again, we're narrowing really closely to this support line down here at 29,924. Now, this is an approximate area, so we're going to call it 30K. So the expectations for me for Bitcoin will be that we'll start to go down over the weekend, probably test this upper bound area. And once we find this area here, we'll get stuck into this triangular wedge. I wouldn't be too surprised if we started to see a bit of a breakout like this. Of course, it might be too soon for those kind of scenarios, but this short-term trend line isn't something that's going to be around for long. So I do feel that we'll probably find something like this and push back up onto this area here towards that 32K area. I'll probably get rejected from there, and we'll continue to kind of bounce around a bit. I'm not expecting us to kind of shift and change out of this sideways trading for any time soon. I think ultimately we're going to be stuck in this position probably for the next kind of 2, 3, maybe even 4 weeks. And in doing so, we're going to correct so many metrics. Ultimately, the main hindrance for Bitcoin at the moment is the amount of fear that's in the space. Although this is now an accumulation zone for many institutions who are doing over-the-counter trades to basically keep the price down low, they're able to accumulate large amounts. We've seen it now within the metrics of Bitcoin that there are more outflows than inflows, i.e. more Bitcoin is flowing out to people than people are bringing back into exchanges. So ultimately, we're now seeing a shift from what it was prior, right? We saw more outflows So we saw more inflows than outflows, and now we're starting to see more outflows than inflows. This is a fantastic metric to say that things are starting to wind up, we're finding a bottom, and we're starting to kind of get things corrected. But in order to really take advantage of this, that sentiment has to be shifting and changing. And so it's all well and good for the institutions to accumulate and to buy up all of that fear that the retail investors have. But ultimately, what we're trying to do is also shift that sentiment. We want to start seeing good retail investments coming back into the market. And that's not likely to happen for a few weeks yet. I feel that we're going to see Bitcoin start to make some motion, start to push its way to the upside, start to go up to those slightly higher areas, 32, 34, get a break above 34. And I think that sentiment will be a shifting and changing, which will then help us take us up towards that 40K area. Going up to 40K is going to be a good milestone, but we have to be mindful that the major resistance at 42K could be a major setback if we do not conquer it. So we'll be mindful of that when we approach it. Obviously, I know a lot of people in the comments say that we've got a crystal ball, and that simply isn't the fact at all. Ultimately, what we're doing here is we're taking all of this data and we're making an informed decision based on what we are seeing. Ultimately, I could be wrong and I might be right. Ultimately, we'll find out in due course. But for me, I'm taking a look at all the data that I have readily available to me, and I'm saying that ultimately I think that we're likely to go sideways for another few weeks before we start to see significant growth with Bitcoin. Ultimately, we cannot fall down too much lower, and this is a testament to that stochastic relative strength index on that weekly chart. We're 1.2. It's very unlikely that you're going to go down all too much lower. Once we reach 0, there's only one place to go, and that is up. So long term, I am bullish, but again, we have to be mindful of that sentiment. Guys, hopefully you have found this a brief Bitcoin update useful and informative. If you have, hit that like button. I really do appreciate it. If you're new, make sure you've subscribed, hit the bell, tap on all, and you won't miss a single video. Guys, with this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.